Okay, good day everyone. This is Capitaland China Trust third quarter 2024 business update dated 30th of October 2024. Okay, we look at the key highlights. Basically, the number of properties the same, 18 assets, same valuation, still same 12 cities, right? Market cap is slightly higher than as at 29 July because at the date of the production of this report, alright, which was 29 October, the valuation is slightly higher at 1.3 billion, primarily because the share price went up, right, to about 76 cents, right? So at 76 cents, the distribution yield based on the first half DPU of 6.05 Singapore cents is around 8%, right? Now the price is lower. I think it's 72 cents. Today is the 30th of December, right? So the yield will be slightly higher, right? And of course the market cap will be lower now, right? So same properties as the first half that we discussed, but you can see again logistics and business parks, lower occupancy and rental, right? So not a good thing. NPI and gross revenue are the same, right, for both logistics and business park. If we look at the retail side, which is the side that's doing okay, I wouldn't say it's doing well, right? The 9-month performance for the 9 malls that they still have, right, is actually up by 1.6%, right? So barely a positive for gross revenue, right? This is only comparing the 9 malls that they have in the last year to this year, right? The 2 malls that they divested obviously are not producing income here. That's why revenue has dropped by 3.4% year on year in reality, right? So but if you look at the 9-month results, actually it's not very good, alright? Why? Because if you look at first half results for these 9 malls, it's actually 4% growth. And I went to estimate the third quarter results year on year. That means this is the latest quarter, right, that they report results. The third quarter results, I estimate they dropped by 3.2% in terms of revenue. That means it's actually a negative. Alright, so that means I think the retail growth or the retail recovery has flatlined, or we are past the peak, alright, which clearly is not a good thing. Alright, so again here I'm not going to talk so much about everything here except for this one. The NPI for retail increased 2.9% year on year. Again, don't be deceived by this number. This is a 9-month performance, right? The first half was actually a lot better at 6.1% growth year on year for NPI. And if I use these two numbers to estimate, I estimate the quarter is minus 3.5% year on year. So actually the quarter results are quite bad, right? Occupancy 91.4%, not accurate because of the empty logistics park. Okay, the real occupancy is 87.6%. Shopper traffic plus 10.1%. Again, not as good as it looks because first half year on year is actually 14.1%. So I estimate first quarter I have the actual results. I went to pull out the numbers is 17.4%, right? Second quarter I estimate to around 10%, right? This is based off the first half result and the first quarter results, right? So I estimate second quarter the year on year shopper traffic growth is 10%. Third quarter is definitely less than 10%, right? I'm not exactly sure how positive it is, but it's less than 10%, right? Based off this number over here, right? So tenant sales again plus 2.6%, 9-month year on year, right? Again, I use the first half results to estimate, right? Third quarter result, tenant sales is actually negative 6%, alright? Alright, this is a simple estimate based off this math over here, okay? The rest I won't talk about. This one, the debt I'm a bit disappointed, right? That the cost of debt is still going up, right? The last round in the first half is 3.49%. Now it's 3.55%. I'm still waiting for this to go down, right? So not going to talk about government stimulus, but there is some hope from this lah. Okay, alright. So I'm not going to talk about this stuff. I already talked about it. This is the part that is a slight positive, right? They are issuing bonds, which is debt at 2.9% per annum. Alright, this is a good thing because you look at their cost of debt overall is 3.55%. So anytime that they can issue debt at a lower percentage, right, this will mean cost savings, right? Because their Chinese debt, right, is to replace their high interest SGD debt. So this is one of the risks whereby they are is hopeful. Okay, I don't know when it will happen, but this number may fall. Alright, and that may help the REIT give out more DPU. Okay, in terms of balance sheet, okay, gearing has gone up to 41.6%, average cost of debt, like I said, a bit disappointing, still going up. Alright, but I'm hopeful that at some point of time in the near future it start going down. Right, this step is SGD, right? So they say that they've already they've already got the financing for this, right? So yeah, they said secured committed offers from existing lenders to extend loans, right? But I'm hopeful that they don't extend in SGD, right? I hope they extend in renminbi. That's to drop the interest rate lah. Okay, that's my hope. Not going to talk about this. Yeah, we'll look at overall. Yeah, this one I already gave you the numbers in depth, right? So why is it that the spending is dropping? I think one of the reasons is because first quarter was boosted a lot by this part, which is services, right? So if you look at the first quarter results here, these first quarter results, you can see services is plus 58.6%, contributed by EV sales. But I think this one is related to government subsidies for EVs, right? So it's not that this REIT doesn't have hope at all. At least the retail side has more hope from government. If the government carries on giving subsidies for special things, or maybe putting money in the citizens' pockets so they can spend more, it's possible that it will help in terms of sales, right? Which at this point overall is quite disappointing lah. By the time we look at the quarter, first quarter we were very encouraged by the numbers, but by the time the quarter comes, it's starting to look flattish, right? So even Golden Week, you see 7.7% increase in shopper traffic, but tenant sales is flat. These people are not spending, right? So anyway, occupancy, the retail side is no issue. Like you can see, very very strong, right? Everything above 95% is at one mall here, and this is sorted by valuation of the mall. So it's biggest to smallest, and these are the top 5 malls, right? So the bottom 4 are actually less than 20% of the portfolio, right? Okay, so strong occupancy for retail side. If you look at rental revisions, right, it's more or less flattish. So even if there is rental revisions coming up, right, I'm not that hopeful that this will actually boost revenue by much. Right, business park outlook, you can see that again is down. Alright, you can see that they say the anchor tenant relocating to their own premise, right? So new tenant in negotiation with them, but even if they get this new tenant, it's still 85%, which is less than the previous number of 91%. Right, so business park not doing well. Right, again, this is a worry here, right, of how the revisions are going to be for these two. It's 60% of the portfolio, right? Yeah, so this is quite a big worry. What will happen? Hopefully it's not empty, but even if it's not empty, I think the rental revision will be good. Logistics is the big weakness. You can see 9 month 2024 revision is they're giving basically 20% off, 22% off to keep people, and this clearly not a good thing and not sustainable, right? These numbers are not accurate. It's actually 70.4 and 72.5%, right? Because the numbers here do not consider this empty logistics park, right? So the real occupancy is 70.4 to 7 and 72.5%. This is the latest number, right? There is slight improvement here, right? This is a slight hope, right? So hopefully maybe logistics parks, the worst is over, but not very sure lah. And this one is flattish, right? The bottom 2 logistics park flattish. This one slight improvement. Again, this is a point of concern in 2025. 57% of this is going to be the lease is going to be expired. So will the tenants leave, right? There seems to be a trend of tenants leaving, right? The business park and logistics park side, right? So there is a worry lah. Right, so you can see their focus long-term wise, right? Diversification into the logistics park and the business parks has not been a good thing, right? So yeah, they say AEI and monetizing IPO assets. Yeah, so this is the only big hope lah. Rate easing cycle, hopefully reduce their cost of debt, and yeah, at this point, and hopefully China can slowly recover. The rest, I don't think I'll talk about too much. If you ask me, generally the results this quarter is the worst so far. Alright, how will I value this REIT? I think I will take some time to think about it and produce a follow-up video. Alright, with that, thank you for listening. Remember, this is not financial advice.